Hi, everybody. This is Gary Dean, and this is our video report for Wednesday, September 28th, 2016. I'm actually doing this report little less than an hour before the market closes because it may be actionable, meaning that if I did this after the close, things you may miss something. So I'm going to leave this to you, but what we're in right now, one thing that I had mentioned in last night's update was that I was looking for a pullback to come back to these moving averages and then a move above this high to cause some bearish divergences. But you can see this move is pretty healthy, and it made it above the previous technical high here. So my thinking is that there's still going to be another drop and another push up. And remember, we still have these gaps that are above that. The bull bears have been really good with letting these gaps close before any significant move to the downside starts. So we closed this gap at the 2164. We have another gap that's up at the 2176, and we never really quite closed this gap here at the where is it? The 2181. It just missed it. But in any case, we still have this triangle that I'm looking at, and we're going to see some resistance that's going to be up near that 2180. So we're at 2167. I don't think it's going to go straight up there. So my take is that we're probably going to get another little shallow pullback, and then eventually come up and either close both these gaps or overshoot this a little bit and have the triangle one a little bit above it. So here, if it does do that, where we get that push above these highs, we're just about definitely going to set up some bearish divergences on the 60-minute chart. And that's going to be important because the last divergence that we had was going back here on the 60-minute chart, where we made a lower low here, and from that we saw a pretty nice little rally from the 2119 all the way up to the 2179. So if we do get if they continue to kind of grind higher and we take these highs out, we're pretty sure we're going to get some bearish divergences that are going to set up. So the reason why I wanted to get it out early was there's no guarantee that it's going to get up here. So maybe you want to start building a short position. As I mentioned in the morning notes, I'm more leaning towards shorting rallies, and really the reason why is I'm going to stick with the uncertainty of the presidential election that's coming up in 40 days, and I don't believe there's going to be any kind of breakout to the upside. So I'm going to take profits on the shorts quickly, like I did on this one here, and sit back, let it run out of steam, and once it gets into some levels where we're getting sell signals and overbought, you just jump short again, and eventually this triangle is going to break. And again, I'm sticking with it's going to break to the downside, and my main reason for that is the bearish divergences on the daily charts, and as you can see here, the S&P was making higher highs, and we were making lower highs on the momentum here. So we have a daily divergence that is saying that these lows should be taken out. And I still believe that we're going to come someplace down into the 2060, or maybe even close this gap down at the 2036, which is right here. So I don't believe these are the lows, and this is just the chop part that's going on before they have the larger drop that's going to come down to here. But you have to be selective on taking your short positions, because if you were to have grabbed your short on this breakdown here, you're right now you're almost 30 points underwater, and you're probably not going to be short before the bigger move happens. So we're in our resistance zone. You can see the first support zone here that held. We had some bullish divergences. this is where I in the morning notes I'd said, you probably want to tighten stops or take your short position off, and you can see we had a nice rally. So now I'm going to be patient. I'm not going to force feed a direction or what I think is going to happen. I'd rather let things play out, let things get really overbought, give us some sell signals, and wait and hopefully close some of these gaps that are here, and which would be right into the second layer of resistance. So my take is that if there's a chance that well, probably the best way to do this is that if the bulls can push through the 2173, they're going to go up to the 2176 and close that gap. This is you could even go 2170, and they're going to come up and close this gap at the 2176. Now, if they get above that, then what will happen is we're going to anticipate that this gap is going to be closed. But again, it's right in our, in this resistance zone. So it's not, it's not, you don't want to be jumping on the bandwagon as far as, on the long side, because things are still really dangerous. And I still believe that more points are going to be made on the downside than on the upside. And that's even if they take out these 2193 highs. So that is, you can see right here, we're at the 78% retracement from this high to this low. So we had some bearish divergences yesterday, and they got blown away. So now, again, I would be anticipating that they have another pullback down to the 2160, and then probably make its way back up to this 2180. That would be the best, really, roadmap I can view right now, because then it's going to set up some divergences on the 15-minute chart as well as the 60. So triangle anticipation on this would be somewhere around the 2177. So in the trading room, I said, I'm leaning towards the short side, but I want to be a little patient, because if it gaps down, I'd rather be reactive to it. And if we take these lows out at the 2152, probably just take a small piece. If we come and we take out these lows at the 2141, probably fill the trade and then just put a stop at these levels here. If we head higher, I want to this is where I want to start laying into short positions. So if it goes down, I'm waiting for support to break. If it goes up, I want to make sure that this resistance holds. Jump on, take a position on the short side. And again, I still, my take is that we're going to be coming down to these levels here. So 2168 is the moving average that we broke. We're right there. If they pop above it, that's when, I believe we'll close this gap, because you'll get a little bit of a mini short covering if there's really that many shorts that are left. But in any case, that is pretty much all I have today. So again, I'm leaning on the short side. That's where my bias is. 2168 is an important pivot, and we're there right now. So if you don't want to try to be perfect with this, one can layer in a small position on it, and then if it continues up, layer in another small position, and eventually this is going to be our stop, where we don't want to see the S&P go above that. So if we can get in at the 2178 or even up at this 2188 in this area here, our stop's going to be right above it. And that's where I took the short here, and it worked out fantastic on it, because my stop was right above here. So I knew where my risk was. It was only a couple points, and the reward was right down to this support, and I did pretty well on that particular trade. So I would, again, I still am not crazy about the long side, for the main reason this uncertainty that is plaguing the market is it's real, and people don't know what to expect. So with that, take this information and do what you want. Have a great night, and I'll talk to you guys in the morning.